Good evening from a lovely, beautiful, sunny, warm Wirral tonight. Just come online before going back in the garden, do some more work in the garden, just to talk about Rightmove's monthly house price index, which they released about 11 hours ago. And I've read through it, but I'm actually going to comment on the article in the Negotiator. So all credit to the Negotiator. They've done an article on it, and I'm just going to comment because it summarises it more easily for me, rather than trying to pick all the bones out of the full report for yourselves in one go. Might be something I might do in a future date, but I think it'd make an awfully long video. So this is more of a summary. So again, credit to the Negotiator. It's their article, not mine. I'm just commenting on it. It's one of their 2-minute reads. So according to these, and this is their interpretation of the Rightmove June house price index, asking prices have softened this month by 0.3%. And this is an average asking price, which is nowhere near what is around my part of the country, which is £378,240. And Rightmove said this is unusual for June. Prices have been falling fastest in London, the South East and South West, where the higher stamp duty rates spike the hardest, which is why I'm getting told by a lot of my peers in the property industry as well. That's definitely the case. You get up here, they're certainly not falling. They're most probably static, I'd say. Maybe the top, maybe over £250,000 houses are dropping. Those below, they're sort of quite stable prices, and you get down to the 70, the ones in sort of £140,000, they're not really moving that much, in my opinion, from what I've observed. So, yes, they're falling down south, but not necessarily in other parts of the country. And I live in Wirral, which is a bit of a micro economy, for want of a better word, where house prices tend to be a little bit higher because there's a lot of very affluent areas, but there's also a lot of deprivation in parts of Birkenhead and over that side. But the side I live on, there's some very affluent areas with footballers living there and whatever. So house prices tend to keep a little bit higher than the national average, should we say. However, not that much, not the national average, which is Rightmove, I say, is £378,240. But yeah, they hold the prices. So in recent years, June usually sees a 0.5% or so increase in prices. And remember, this is saying it's just over 0.25% down, 1/3% down. As buyers seek to secure their offers before going on holiday. So typically, the spring market is the busiest. People put the houses on the market come sort of March, April, and they're trying to get them sold in the run up to the summer holidays. The port, along with most of the property industry commentators, have pinned this mini slump on both the post-April 1st stamp duty hikes, I'd agree there, yeah, and the consequent glut of properties on the market after many buyers brought forward their purchases. I'd say there's a lot coming onto the market. I think, rather than, I'm not sure how that's phrased properly or not. I think there's definitely more houses coming to the market as people are cashing in and want to move, either downsizing or upsizing, either or. And also a lot of investors are selling the stock up. I'm seeing portfolios in the market, currently negotiating on one for someone at the moment. And we're seeing landlords selling significant amounts of stock. And that's more to do, I think, with the Renters' Rights Bill that's going to come into force most probably July 22nd, and changes to the EPCs and the perceived continuous attack by this and the past governments on landlords. That's the opinion I'm getting told by my peers, and it's one I subscribe to as well. The port, along with most other, Rightmove also says many areas of the UK are now therefore seeing buyers' markets, so there's a lot of properties, more properties in the market, buyers are being able to pick and choose. Vendors facing a decade-high competition, so this is the most competition in a decade, which is quite significant again. To secure buyer drops, so this is helping to secure buyers dropping their house, their asking prices. It appears that we're now seeing a decade-high level of homes for sale, and the recent stamp duty increase in England have delayed the impact on new sellers' pricing. So it's stopping new sellers charging as much as, or putting the properties on the market for as much as they want to, should we say? Because this, certainly as an investor, I take into account stamp duty when I put an offer in, and I subtract that off what my offer, because I have to, because it's a business for me. I'm presuming that if you're buying a house, you're also looking at stamp duty, and that will affect your offer. It has to be within your budget. So prices have fallen this month after new records set in April. So they had a really good April. People trying to get ahead of that stamp duty increase. Agents have been telling us that sellers need to set a competitive price to have a better chance of finding a buyer in the current market, and it looks like many are listening to and responding to that message. Such realistic pricing will remain key in the coming months, so that's suggesting there's still going to be a lot of properties around, lots of choice for investors, hopefully, and lots good properties to be getting. So Tom Bill, head of UK residential research at Knight Frank, the stamp duty cliff edge in April cooled demand, and sellers have realised just how much a buyer's market is. He says the number of UK listings in May 25% higher than the 5-year average, while the number of new buyers was a fifth lower. His data shows. Supply has risen for reasons that include delayed activity due to last year's election and budget, a degree of financial distress as mortgage rates normalise. So, obviously, mortgage rates after Truss and Kwarteng's mini budget, the mortgage rates skyrocketed, but they're actually normalising, because on average over 25 years, mortgage rates are 6%, and unrealistically, what was it, 0.25% or whatever it was. So now we're seeing rates start to normalise, and this will be the new normal, whatever they settle at. Supply has risen for the reasons that include delayed. A growing number of landlords trying to sell due to legislative changing, which is what I said before. Whatever the cause, asking prices need to reflect the imbalance, particularly for anyone wanting to move before speculation ahead of the autumn budget potentially drags on activity after the summer. And then you've got Jeremy Leaf, who's a North London estate agent and former Rick's residential chairman. He says the amount of unsold stock is rising and transaction numbers are falling. He says, however, the overwhelming majority of agreed sales are holding, although some prices are softening. By softening, they mean that vendors are reducing the prices. We are telling sellers who are also buyers but receiving little or no interest in their properties to concentrate on the difference between the two and reduce closer to their bottom line while still leaving room for negotiation. New sellers, particularly of flats, need to recognise quickly that buyers' market conditions and price stand out from the crowd. Certainly flats I really don't go for. And there is a comment on here by, it doesn't say it's by, and so someone's commented on this, and I'll just tell you what the comment says. So, while Rightmove's June data shows an unusual softening of asking prices, it's the role of a neutral property price indicator, or its role as a neutral property price indicator is compromised by a business model that heavily prioritises shareholder returns over agents and consumer interests. So they're criticising the way that Rightmove does it. According to Rightmove's own house price index, average asking prices dipped by 0.3% in June, a rare divergence from the typical 0.4% seasonal rise. Yet this headline obscures a fundamental conflict of interest in how the portal operates. So they're commenting on how Rightmove operates as a portal. Beneath the surface, Rightmove adheres to a capital-light policy that directs virtually all surplus cash back to investors. So, and it gives figures then. So in for the year 2024, it returned 181.7 million to shareholders via buybacks and dividends out of underlying operating profit. Didn't realise Rightmove made this much profit, but there you go. In line with its long-standing commitment to distribute 100% of free cash flow rather than reinvest in more sophisticated analytics and lower agent fees. So there has been criticism about Rightmove raising their fees for estate agents. If you see, you may have seen it on different blogs and stuff like that. This shareholder first orientation produces an extraordinary profitability statutory operating profit margin, which stood at 66%, with an underlying margin of 70.3% in the same period, far exceeding the 50 to 60% gross margins typical of digital services and effectively capturing most subscription fees paid by estate agents as near pure profit. So again, they're having a pub at Rightmove for the amount of money they charge estate agents. Agents are effectively locked in with 90% retention of agency branches and over 95% awareness among UK home movers. Few brokers can risk unsubscribing, especially given the psychological pressure Rightmove applies. Please comment if you know about that. I don't know about that. List everywhere and you won't be on Rightmove to deter defections and maintain its dominant captive revenue stream. So it sounds like Rightmove penalise you if you list on likes of prime location, etc. Given these misaligned incentives where the portal's core duty is to its shareholders, not the accuracy of market data, property professionals and consumers should cross-reference Rightmove's figures with alternative portals, independent valuation tools and on-the-ground agent feedback rather than treating it as a definitive trusted source of pricing. I think there's a good takeaway there. Yeah, I always do my own pricing. Average sold house prices within the last 12 months if I'm looking at property. Given, I always do that. I don't rely on Rightmove to tell me that, so I will look around for land registry data on property sold in the last 12 months within a quarter of a mile of where I'm buying a house to find out what the average sold price for a house was in good condition, and I can gauge my offer on that. So I think they're right in what they're saying in this comment. Until you also have to bear in mind, yes, they are right. Rightmove have put up their fees to estate agents, and there is a massive profit in that. So hey ho, but that's on the back of the June index. They're saying so. Yes, the figures are good information. Double check them. Use your own knowledge to go back and check sold house prices, etc. in whatever area you're dealing, because there are microeconomies, like I've said before. This is where I live, is a microeconomy where house prices actually stay higher. So an average house price across the country doesn't cut it in your locality, to be honest with you, and you need to do your own due diligence. And in fact, I'm going to be doing a course on due diligence in the near future, which I'm going to put online. Watch out for the advert, it's one not to miss, and I will show you how to do due diligence when you're looking for houses. I'm not going to show you how to buy cheap houses, I'm not one of these gurus, but I will show you how to stay safe when you're doing your due diligence and how to look for decent property. Like I said, I'm not advising you to buy cheap property, I'm just going to show you how to do the due diligence. Anyway, that's all from me for this evening. It's 30 minutes into the video and I want to get you on LinkedIn, so I've got to stay under 15. Please comment below what you think. Again, link to my podcast, new episode out today. Please like, subscribe and share. It takes nothing to share. It means a huge amount to me and I'm really grateful for your support with that. Anyway, enjoy the rest of this lovely evening. Keep moving forward. I'll talk to you next time.